Hey guys, Scott here. And let me ask you something. When was the last time you checked the news and you didn't feel like the world was about to blow up? Because right now, every time you open your phone, something has exploded. Now, Trump has pulled another move, another threat, another headline. All of this is being triggered by one person who happens to be the president of the world's biggest economy. And his every move, every word is actually so unpredictable right now. If global markets hate one thing, it is uncertainty. One day, it is tariffs. The next day, it's threats. Then suddenly, major economies are turning against each other. And that part is scary because it's not just noise anymore. It has started hitting markets, money, and confidence. We just saw it. Trump threatens new tariffs on Europe, and global markets immediately start crashing. At the same time, people are watching property markets fall in places like Canada and New Zealand. China is going through one of the largest property collapses in modern history. There are even parts of the US where property prices are now rolling over. So naturally, people are asking the same question. If the world already feels this unstable and we are only at the beginning of the year, how does this end? Is my job safe? Is my family safe? Is the economy safe? Is Australia safe? And if you feel that anxiety, you're actually not crazy. So instead of guessing, I've pulled together all of the facts for you right here in this video. I went through the latest numbers, the latest economic commentary, and what the big institutions are warning about right now, and I stitched it all into one clear story for you. And here's how we're going to do it. First, I will explain what is actually happening in the world right now, what has already hit markets, and how money is responding. Then we bring it back home and talk about what this realistically means for Australia, our economy, and property in 2026. Quick one before we start. If you want more straight, simple breakdowns on property and the economy, hit subscribe and hit the bell icon because I do one of these videos every single day. All right, let's get into it. Let's be clear about this. What we are seeing is not a minor political disagreement that will quietly pass. This is the global balance of power shifting in real time, and the escalation has been extremely fast. Over the past week alone, geopolitical risks have surged. The IMF has flagged rising global instability following the US seizure of the Venezuelan president, renewed unrest, and escalating trade threats. These events did not appear out of nowhere. They stacked on top of conflicts that were already unresolved across Europe, the Middle East, and parts of Asia. Then things escalated again. Trump's renewed push around Greenland significantly raised the stakes. Greenland is an autonomous territory under Denmark, and Denmark is part of the European Union. Europe has been very clear that Greenland is not for sale. Trump's response was not diplomacy, it was tariffs framed as a national security issue. The moment tariffs enter the conversation, this stops being political theater and becomes an economic weapon. Let's be clear, warfare today is not just soldiers going against soldiers, it can be economies going against economies. At that point, markets stop listening to speeches and start pricing in risk. Because this is no longer the US versus Denmark. It starts to look like the US versus Europe. And when conflicts reach that scale, other countries eventually get pulled in and forced to choose sides. This is exactly how global risk spreads. Markets reacted immediately. US stocks sold off sharply. The Dow fell close to 900 points in a single session. The S&P 500 dropped roughly 2%. The Nasdaq fell more than 2% as well. Crypto did not escape. Bitcoin slid below $90,000 as investors rush to reduce risk exposure. Now, this pattern really matters. When uncertainty spikes, money runs away from risk. Investors sell shares, pull capital out of crypto, and reduce exposure to volatility. That money does not disappear, it moves into assets seen as safe. So we saw the money moving, and gold surged toward record highs. Silver and platinum jumped as the safe haven trade accelerated. This was not panic, it was capital relocating in real time. Now zooming out, this is exactly what global institutions are warning about. The IMF has been clear that tariff escalation does not stay contained. Trade conflicts spill into business decisions, slow investment, weaken confidence, and eventually hit economic growth. The UN Trade Agency has echoed this warning that global trade growth is slowing and that geopolitics are reshaping how commerce works around the world. So the core question becomes unavoidable. If this is what is happening globally, what does it actually mean for Australia? Now, here is the key point. Australia is not the main battlefield in the US versus Europe conflict, but we also do not live in a bubble. When the world's largest economy creates instability, ripple effects spread everywhere, including Australia. Now, that said, Australia's exposure looks very different to what many people fear. Australia's biggest risk is not a direct hit, it is second-order exposure, second-order consequences. We feel the pain if our major trading partners feel pain first. Now, our biggest trading partner is China. Here is what most people miss. Despite heavy tariff pressure that's been building for a year and ongoing geopolitical tension, China finished 2025 with a record trade surplus of nearly $1.2 trillion. China achieved this by shifting exports into other markets and reducing reliance on the US. Now that matters for Australia. If China continues exporting at scale, demand for commodities and raw materials remain intact for us here at home. In fact, when tariffs restricted China's access to US markets, Australia benefited in some cases through cheaper imports and stronger alternative trade flows. Now look at what Australia sells to the world. Australia exports energy, metals, and food predominantly. Now, when the world gets nervous, demand for many of these does not disappear. In some cases, it actually increases. Gold is the clearest example. As fear rises, gold demand rises. Australia is a major gold exporter. Government forecasts show gold export revenues rising from around $47 billion in FY25 to roughly $70 billion in FY26. That is a meaningful increase. Iron ore, Australia's largest export, is expected to remain broadly stable at around $115 billion. That's not a collapse, it is resilience. Some exports ease slightly, others rise. Overall, exports remain strong, providing Australia with a natural buffer during periods of global stress. It is not just mining. Australian agriculture has had a strong run, with forecasts suggesting the sector could reach around $100 billion in value in 2026. Food demand does not vanish during uncertainty as well. If anything, it becomes more valuable. Now let's talk about what really matters for everyday Aussies: jobs. Property markets collapse when unemployment surges and incomes disappear. That is not what we are seeing here in Australia. Australia has quietly moved out of a per capita recession. This is really good news. We are no longer in recession territory. Growth has not been spectacular, but it has been positive. What really surprised economists was the labor market. Almost everyone expected unemployment to rise as global conditions tightened. Instead, unemployment fell to just 4.1%. That tells you the jobs market is holding up far better than expected. A strong labor market matters because when people stay employed, spending does not collapse. Demand stays alive in the economy, households can service their mortgages, and confidence does not evaporate overnight. Now, on top of that, lending risk is being actively contained. APRA has tightened the screws on risky debt. Debt-to-income limits are in place, and the 3% serviceability buffer remains. That means households are only borrowing what they can comfortably afford in our financial system. Even if rates rise, there's a 3% buffer right there. So any debt being taken on right now is more stable, more conservative, and far less likely to blow up under pressure. Now, let's take a look at population growth because it does continue, and this expands the tax base, and it does support long-term demand. When you put all of this together, Australia's economy looks resilient rather than fragile. Now, the IMF agrees. They are not forecasting a boom here in Australia, but they are also not forecasting a crash. Their base case is moderate growth of around 2.1 to 2.2% in 2026, even after factoring in global uncertainty. The main watch-out remains inflation. If global tensions push prices higher, the RBA may respond cautiously. Even then, modest rate adjustments would not destabilize the broader economy. And guys, by the way, 2.1 to 2.2% GDP growth, that is actually one of the highest in the developed world. That is a strong number. So let's land this clearly. Yes, global uncertainty is real. Yes, Trump's actions are shaking confidence. Yes, trade tensions and geopolitical risk create volatility, but Australia is not facing an immediate economic shock. Most of our exposure is indirect, and we have strong buffers through exports, employment, population growth, and financial regulation, one of the best financial regulation systems in the world. The bigger risk is not an overnight collapse. The bigger risk is prolonged uncertainty, dragging on confidence and investment over time. That is what needs to be watched really, really closely in 2026. All right, guys, that was my breakdown of what's happening globally and what it realistically means for Australia and Aussies this year. Let me know in the comments if the news has been making you anxious or if you know someone who feels the pressure right now. It helps to talk about it. If you found this useful, hit like, hit subscribe, and hit the bell icon so you never miss one of my daily updates. This is your daily property update, your 5 to 8 minute update on the economy and property, so you can stay ahead of the market and think like a property insider, Australia Day edition. See you guys at the next video.